Thank you so much for joining Conversations with Cohen. I'm your host, Greg Cohen, Office Leasing Specialist at Cressa. And this podcast and video series are for office tenants to help educate them about all things regarding their office, from leasing to architecture and everything in between. Whether you're an entrepreneur thinking about your first office or a director of real estate managing a large real estate portfolio, this podcast is for you. I've got a really interesting show for you today. My guest is Aaron Gordon of Gordon Companies, a business that's been going for over 50 years, started by his father, David Gordon. From small businesses to large enterprises, insurance is a necessity when leasing office space. And today, we're going to be talking about what office tenants need to know about insurance. And now, with some businesses working from home, some businesses unable to service their clients because of the pandemic, as well as other businesses doing audits of their expenses, I thought we'd check in with an expert. One that I got to know as he is a client of mine, where we had the opportunity to become fast friends. Before we get started, and just as a reminder, if you want to reach me, I'm at Greg Cohen NYC on Instagram. And if you're new to this video series or podcast, hit the subscribe button below so you never miss a future episode. Aaron, welcome to the show.
Thanks for having me. It's one of the more exciting things I've done in this summer season, so it's great to be with you.
Glad you could be here. Perhaps you can start with introducing yourself to the audience.
Sure. I'm Aaron Gordon. As you mentioned, I am a second generation, not quite principal, but manager of a boutique insurance advisory firm and brokerage firm located or somewhat located in Midtown Manhattan. Now coming from, unfortunately, not from the office that you helped us find, but from my home in Queens. We provide property and casualty insurance advice and services and policy placement for individuals and businesses, large and small. No account is too small for us. No account is too large from us. And my father and my mother and I try to provide the service along with our team that is the foundation of our business, which is service first. Everyone says that, but like you, everyone gets my cell phone. People know how to reach us, and we try to be there for our clients, especially in troubling times, and try to be there through all the different parts of their personal and commercial insurance life cycle, whether it's starting a business, moving a business, readjusting a business, consolidating a business, expanding a business, and all those parts in between. We try to just be that unbiased insurance, I don't want to say parent, but kind of little voice in the back of the head. And then we help with the product placement as well to make sure that people, can productively continue their businesses.
And by the way, I can say as a side note, I've seen that level of service that you provided, and I love it. And for those listening, Gordon Companies really does deliver that. So just a side note.
It takes one to know one, so I appreciate it.
So maybe we can start today with what lessons companies, businesses have learned from COVID when it comes to the correct insurance or the insurance that they need to protect their businesses.
I think that, first of all, this is not a conversation that's at its end now. There's, at this point, a tremendous amount of litigation, a tremendous amount of thought going into insurance and insurance going forward, because I think what we learned, and this is not to knock my industry because I love what I do, is that there were a lot of assumptions that were made when people bought insurance or when people thought that they were buying insurance. And people, rather than, and this is not to knock the consumer, because I don't think that if I wasn't in the insurance business that I would think that insurance was the most important thing on my desk. But I think that what we learned most is that people need to understand their risk, understand what they're buying and what they're not buying, and what their options are. There's a lot of confusion about business interruption. It's no secret that most insurance carriers, for most insurance products, the vast majority are not being paid for business interruption, and we can get into the details about why that's happening or how that's happening. But what that led to is two really important things happening in the industry. One is that consumers are actually questioning why, how can I protect myself in the future? And insurers, because A, there's an opportunity to make some money, which is they are for-profit entities, but B, we're in the business of helping people. And it has been a difficult time both on the intermediary or agent side and on the carrier underwriter side, saying to people, yes, we sold you a product. In the 52 years that we've been in business, when there are claims, it's usually pretty clear as to what the answer is. There was a lot of ambiguity, and you didn't get paid for something that you thought you were getting paid for. And that kind of puts a stain on our reputation. Not that we could have done anything differently at that point, but how can we go forward? How can we work with the local governments and federal government? How can we work with the carriers or the insurance community at large and make sure that people are better educated and better prepared for anything in the future?
So how do we do that? How does a new business, or how does a business who's now starting up, because there are new businesses that are coming out of this, what do we do so that we don't make the same mistakes twice?
Well, the first thing is, I think that everyone needs to look at their risk and not necessarily their insurance requirements, be it from a landlord or from a lender. I know that every advisor is going to tell you that in any field that they're in, but that is the most important thing. And I think that that's proven itself through this pandemic, because if I only got the minimum insurance and I didn't look at, hey, is there a virus exclusion? Is there a pandemic exclusion? Is my business interruption only related to physical damage to my space, not the inability to access my space? So I'm not saying that people should spend 10, 20, 30 times what their budget is, but maybe in there, if the advisor says, hey, we had this thing called the pandemic, here's what happened. In response, we're offering this add-on or different type of coverage. I'm going to get you a proposal for that. Can I get you a proposal for that? When I get you a proposal for that, it's going to cost you X more. And at least then the consumers can be educated enough to say, okay, I understand the risks. I'm going to spend that extra $200 a year, or I'm not going to spend that extra $2,000 a year to cover the pandemic exclusion or remove the pandemic exclusion, to remove the premises only physical damage issue. That I think is the most important thing, is to look at what the options are and maybe not just quickly say what's the cheapest option, because very often the difference between the cheapest and the best, especially in the small commercial business, is insignificant in terms of dollars.
So you talk about the physical space, and when I think about new tenants have, when you move into a building, the landlord has initial requirements, right? Could you help us understand what those are, and why that might not necessarily be enough?
Sure. So in general, landlords care about one thing and one thing only, and that's liability risk. Liability is the insurance coverage that provides the tenant in this case, and by extension of the policy, the landlord, coverage for any damage to a third party. So someone comes to my office on the way in, they trip and fall, they break their leg, a ceiling tile falls on them. In the tenant case, it's if I am negligent, if I leave an extension cord across my office space, why should my landlord's insurance or my landlord be responsible for the injury that happens to someone or the damage that happens to someone in my space when I should have been responsible for that? So landlords, and it varies based on the space and based on the landlord, but you're talking about anywhere from $1 million in liability insurance, which is a minimum of, let's say, $500 a year, anywhere to some requiring a $5 million umbrella, so a total of $6 million, and $10 million, up to $10 million. So that's what we see. That's one. And the second thing that they require, which every business across the United States is required to carry when you have employees, is workers' compensation insurance, which covers your employees in the event that they get hurt at work, things like that. So most landlords just want to see proof of both of those. The important thing that they don't require traditionally is property insurance. So if my desk gets damaged, or my computer goes down, or there's a fire in my server room, my landlord may not require me to have that insurance, but I could, most of the time for free, included in that 500 minimum, or including whatever I'm paying for the liability risk, in most offices, right? Not retail space, but most office space, it's basically an add-in, because how much stuff does the business have per square foot? And the insurance on that is very cheap. So, and what we'll see, by the way, which I think is going to be an interesting one, is a lot of the landlords now have tenants that are not paying their rent. The reason why they're not paying their rent is because they say that they don't have the funds to pay for it. Part of the reason why they don't have the funds to pay for it is because their insurance didn't pay for their business interruption. So we haven't seen it yet, but could we see landlords require a more significant business interruption piece now that says, hey, for whatever reason, if you can't get to your office, this is the best way that we can make sure you pay your rent, is make sure that your insurance company pays your rent for you? We might see that. The question is, do people fight back? Do attorneys go for that?
Right. Now, within your physical space is also, besides your furniture, is your technology, your IT. And what I think is really interesting is, and we had Chris Smith from Cloud9 Smart on the show. We were talking about technology and working from home. You have a physical, in many instances, a server room for those who aren't on the cloud, or your infrastructure is still in your office despite everyone working from home. But there are inherently some risks there. So hoping you could speak to how to protect what situations you may have seen that has played true, that has been a disruption, if at all, and are there ways to protect against that?
Sure. So great question. There's a couple of things that kind of play into that. There's two main pieces. One is the actual physical technology. One of the things that we saw in the beginning of this pandemic was that there was a huge strain and pressure on the supply chain. So the ability for businesses to act quickly and not cheaply when something happens is often a important factor when they buy their insurance. When you buy your insurance, most policies, and the only policies that we recommend, are replacement cost. So whether your server is 10 years old or 2 days old, the insurance company is going to pay you or reimburse you or pay the expense of a like kind and quality server that's new. That doesn't mean that if they can't find a new, one that's sitting on the shelf in Best Buy that's of the 2-year-old version, the one you have, that they won't get that. Of course they will. But what about when it's more expensive to replace that server? What about when there's more pressure on the server itself? We had in our office building a server closet that was not maintained correctly by the tenant. They had some paper items or cardboard items, styrofoam, too close to their servers. Server was getting older. Server overheated, went up in flames. Sprinklers went off, destroyed that office. Forget about what it did to every other office. And now they need to start over. And if that happened on March 8th, how are you getting a new server? How are you getting a new laptop? And when you're having all these other expenses, if the money is coming straight out of your pocket and you're not sure what the future holds, you might spend differently or might be able to spend differently than if someone else is writing the check. As you can look at that. And the other thing that I just have to mention, because it's super important and a lot of people are thinking about it, not thinking about it, doesn't necessarily directly relate to office space, is the cyber liability risk for businesses. So the opportunity for a hack, the opportunity for infiltration of the system, because maybe people are remoting into their computer space, so nobody can oversee to make sure that nobody's sitting at that computer while they're working. Or I don't know if my employee's internet or firewall is up to the standard of my office. So therefore now they're accessing the personal data that's in my office on the cloud or at the server level. And what happens if they get infiltrated at their home, which we're seeing a lot of, because if you're a hacker, you're salivating for this, because everyone who just has a simple internet connection now is, putting all their data on it as opposed to offices.
And isn't there something about this SHIELD Act that's been put in place by New York State, which is also going to create create more exposure for companies?
Sure. So the challenge, and I don't want to get involved in politics and all that kind of stuff, is that there's a lot of ambiguity with all of this.
Understood.
So the way that we look at it is, anybody, I think, if they spend a few minutes talking to us or talking to an IT expert, would say that they have some sort of cyber liability risk. They have some sort of cyber risk. There are options for different things that protect different employees, protected information, what is HIPAA, what's not HIPAA, not to sidebar, but, oftentimes you get, hey, I don't handle my IT. It's in the cloud with the guest that you had or whatever. That's great. And yes, ultimately it might lead up to them and their insurance is going to be more important or more expensive because they're in that business. But if someone's credit card information or personal data or social security number went missing because they gave it to me, they're coming after me first. I may be able to go after the next guy, but they're coming after me first. So do I have the money and the time to spend getting myself out of that case when I don't have insurance? I don't know.
But I'm a private equity firm, I'm a hedge fund, or I'm an accounting firm. Like, what am I vulnerable to? Number one, and of let's say of every 100 clients you have, what percentage have cybersecurity insurance currently?
So it's going up every day. I would say 50% plus of our commercial insureds have it. The reason is because when it came to market 12 or so years ago, between 10 and 12 years ago, it was new, it was very expensive, and it was a pain to get, like most insurance products. Now, for the average small business, an accounting firm, a little bit different because they deal with a lot of protected information. An accounting firm is probably as risky as a physician's office, but nobody thinks of it that way, right? They got everyone's social security number, they got everyone's direct deposit information. But take my office, we don't take a lot of that information, or your office, you don't take a lot of personal information. So for you to tack on some cyber liability insurance to your regular office policy, a couple $100 a year, and that protects you, even if it's just the defense costs. And it also provides for disruption of your IT. A big one is ransomware. Someone hacks your network and then tells you that they're going to release all this information. So we're seeing the percentages go up. We actually, in the last 2 years, started actively reaching out to our clients saying, here's your commercial renewal. It's renewed at, again, $510. We're including an option here for you to tack on some base cyber insurance for $40 a year.
And what's the response been for those who haven't had it, who are getting it? Is it, we didn't know about it?
Most people say the first reaction is, I'm not sure what my risk is. Yes, it's less likely for a crazy hacker to come after my office because there's less there, but it can happen. And the real challenge is that if you don't have it, one of these things can just gut your business. So if you have a potential hack in your office, you have to notify all of your potential hacked clients, potential, not actual, that there might have been a breach. You have to outsource that to the tune of between $40 and $80 a record, depending upon where it is. And just that, you have 10,000 clients. How many people can write that check just to do the reporting? And then you discover that nothing was really compromised. And what I can tell you is that the local and federal governments are becoming more strict about this, in that there is no excuse not to protect your data anymore. So they are totally plaintiff, and reasonably so, right? We should be protecting people's information. It's really bad when people's, my identity was stolen in February. It was my biggest problem until COVID happened, and it's terrible. Thank God, there's amazing monitoring services and things like that, but it's almost too late when someone's got all your information for the rest of your life. You have to worry about it because you can't get a new social security number in the United States.
So when you're talking about, first of all, I'm sorry to hear that happened to you. That's pretty awful.
It was a crazy few days, but I have a great bank, so they gave me my assets back, and it is what it is. It should be, with what's going on in the world. It was just some sleepless nights, but I thought that was my biggest problem until then. This whole thing happened.
Right. When we talk about protecting ourselves, we also have to think about protecting our employees and protecting ourselves, protecting our businesses. And I would imagine our exposure goes up manyfold with COVID and the potential coming back to work, right? The return to work. So Can you talk a little bit about what that exposure might be for businesses, because they might not necessarily be thinking about it, and how to properly protect themselves?
Of course. So the challenge with what's going on now is that we have a virus that we know very little about. And most importantly for this conversation, we have no idea how people get it or where they get it. So you have an employee who's coming back to work. First of all, they're nervous, so we'll get to that in a minute. But they're coming back to work and they come back to the office and 10 days later, they're sick. Did they get it on the bus? Did they get it on the subway? Did they get it from their car? Did they get it in the supermarket? Did they get it in the coffee shop? Or did they get it in the office? Nobody knows. But what I do know is that my employer is an easy target, because most people don't wake up in the morning saying, I got COVID, I can sue the MTA because I got it on the subway. Most people look at that as a non-starter. But I was perfectly healthy when I was working from home. My employer reopened the office, and 3 weeks later I got sick. I can nail my employer for that. Now, it is true that many attorneys will tell you that there hasn't been any cases yet where the employer has been held liable in the recent time, right? If there were employers that didn't close down when they were supposed to, if the employers don't have the proper safety precautions, that's a different step. So let me just say that we're starting with, we protect our employees, we're following the government guidelines, we're following the reopen structure, because if you don't do that and you commit either fraud or gross negligence, no insurance is going to protect you. If it is a free-for-all similar to, where some social environments and offices were free-for-alls, very hard to find protection for that. But let's say that the building is doing what they're supposed to be doing, the office is doing what they're supposed to be doing, and life happens and someone gets it. Many attorneys will tell you that it's very hard to find a guilty verdict here because we can't prove where the person got sick and how the person got sick. We had a workers' comp case very early on where we insure a large emergency department, not in New York, in a different state. And so there was a lot of questions about workers' compensation. An employee gets sick at work. How do they get reimbursed for their lost time? How do they get reimbursed for their medical expenses? So most insurers were saying you can't prove that you got it at work. Well, if you're working in the emergency department of, let's say, Cornell Hospital, not our client, but I'm just using an example, Cornell Hospital during the height of the pandemic in New York, safe to say you got it there. And we want to make sure that those first line workers are actually coming to work and they're not scared of coming to work. So we provide them with those protections. Standard offices, not so much. But we live in America. It's 2020. You could sue almost anyone for almost anything. So if businesses don't have liability insurance or don't have employment practices liability insurance, which I'll get to in a second, then they're stuck paying the defense costs. Forget about the liability. But who's going to pay the lawyers? Who's going to, right now my business is already struggling. I just reopened and now I have a lawsuit. So that's why liability insurance is really important. The other really important one now is EPLI, or employment practices liability insurance. Not the cheapest insurance right now. Not going to lie, because there's a lot of stuff going on. Employment practice liability insurance covers the employer for issues relating to their employee. So gender discrimination, sexual orientation discrimination, race discrimination, wage hour issues, all that kind of stuff is covered by an employment practices liability. Why that's important in COVID is most states, when you reopen and you reopen in a safe manner, a couple of months ago, you couldn't fire an employee because they didn't want to come to work. There was protection there for the employees. Now I've made the office safe for my employees. I'm following all the guidelines. I'm reopening my office and someone doesn't want to come. Now I can let them go. Yes, there's government unemployment, things like that, but I can let them go. Then they turn around and say, you didn't fire me because I said I wouldn't come. You fired me because of X. Or I said I would come, but you wouldn't make the office safe to my standards. Now we have litigation. Now we need insurance for that. So it sounds like I'm just trying to sell a lot of insurance, but the fact is that these are unprecedented times and nobody knows what's going to happen. So maybe there's opportunity to say, hey, maybe we should look at our insurance infrastructure again.
There's the massive potential vulnerabilities. There are some opportunities for folks to take advantage, and employers need to be thinking about what my options are.
Right. And a lot of that also, a lot of it is a local discussion. So different, obviously, there are different states that have different guidelines for employers, or, that are more plaintiff friendly or defense friendly or things like that. So we just try to look at the different localities as well, because there are differences between New York City and Illinois or Massachusetts or Florida or Texas.
So, you said, okay, here might be an opportunity for a company to do an analysis of their insurance. There are certainly those companies who are doing that currently. Perhaps there are places where there can be what we'll call premium savings opportunities, places where companies can save some money. So where are one I'm thinking about a new tenant or a tenant going into a new space, right? We go back to work. There's pent-up demand from companies who decided, you know what, I'm not going to take office space right now. I'm going to see out my end of my lease, and then I'll work from home for good for now until there's visibility. Now I'm going to come back to work, and I'm going to find a new space. How do I reduce the amount of money that I spend upfront with regards to my liability insurance? Is my first question. Maybe you can speak to that.
So first, it's not that in most businesses, the liability rate, or in all businesses, the liability rate is driven by one of two factors: sales/payroll and square footage occupied. In most offices, it's based on the square feet that you take. Now, it could be, and one of the things that I think that tenants should be looking at on both the property and the liability side is there is a lot of supply. And that means that you can get a quote unquote safer office, newer, better sprinkler systems, fire resistive construction, newer floors, all that kind of stuff that limits your liability exposure. And whereas before it would say, okay, the nicer office spaces, quote unquote, nicer office spaces, newer office spaces would cost me more money, right? Now with the supply, and this is your expertise, not mine, but I feel like that there's an opportunity to say, okay, there are buildings that pushed off getting sprinklered. If you move into a sprinklered office, 100% sprinklered building, which I know that they're required to do, or you move into a building that was constructed in the last 30 years instead of the last 100 years, you see immediate savings right there. So it's the same. So that one is, I don't think that it's a number that's going to move the needle on, hey, I should spend more on my per square foot rent to save $1,000 on my insurance.
Right.
But apples to apples, if I can say that, okay, if I'm in a building that's 100 years old, that means that 3 years into my lease, 4 years into my lease, 5 years into my lease, if I decide to renew it, then I'm going to be in an even older building. My rates are going to go up. The odds of a water loss are higher in older buildings than they are in newer buildings. The odds of the pipe bursting in my office, liability damaging the office downstairs, the sink clogging in my office, damaging the office downstairs. A big one in older buildings is over usage. I don't know what the right term is, so I apologize, but over exerting power now is a big one. Offices were not built to have this many computers, this many phones plugged in, this many machines, coffee machines, servers, cameras, all that kind of stuff. And now we're putting pressure on the electrical infrastructure, and electrical fires are a big deal. Electrical fires can cause a surge and damage your server. So it's an easy way to lower your insurance risk by getting a newer office space, kind of like buying a new house. The question is just, what does that cost?
Right. Okay. So where are there other areas for the opportunity to save costs when thinking about this going forward?
Right. So the big one that we're seeing is that every business in the United States of America has to have workers' compensation insurance. Workers' compensation insurance is strictly rated dollar for dollar based on your payroll. So one of the things that we've done with a lot of our clients, and parenthetically, at the end of every year, all workers' compensation policies are audited. Not all insurance policies are audited. Simple audit process. Hey, Aaron, you told us that you were going to pay your employees $250,000 this year on the clerical side. What was the real number? If it was $260,000, you owe us a couple bucks. If it was $240,000, we owe you a couple bucks. Now, most people think that insurance agents won't reach out to their clients because that means I have to give back commission, right? It's no secret. I make a percentage of every policy that I sell. But at the end of the day, if there is an audit at the end of the road, I'm going to give it back anyway. So one of the things that we've been doing, and I can say that a lot of our counterparts are doing this, especially on the smaller agencies, because that's where that touches, is I know that your payroll has gone down this year. You are looking at every expense. If I reevaluate your workers' compensation and do an audit now, in the middle of the policy term, your payroll is half, your expense is half. Now, it could be, and I pray to God that everything goes back to normal very soon, and your payroll goes right back up. Well, you know what your bottom line expense is for that $1 million in payroll. But right now, when you only have $500,000 in payroll, why wouldn't I get you the savings now so that you can continue your business? Same thing with businesses that are rated by square foot. Many insurance companies will say, you haven't been in your office, X. We're not going to give you 100% credit on your liability, but we'll give you a certain credit. Kind of like a good personal corollary is like, the auto insurers that are giving credits because people were driving less miles for the months of April, May, and June. So same thing. If we know, now that requires the client and the agent to be a little bit ahead of the curve, reaching out to the insurance company because they're not quickly giving the credits. And the same thing with the ones that are based on sales. If your sales are hurting, why should you not see the savings now? You don't really care. If your policy doesn't end until March of 2021, and I could get you a 50% insurance savings now, you might be out of business by March of 2021 if you don't see some savings. So reevaluating how the insurance is rated and saying, is it rated on sales? Are the sales accurate? Usually we do that at the end of the policy term. But the whole world's upside down. Is it rated on payroll? What's my payroll? Can I get a credit because no one's been in my office for 5 months? Another question to ask. And what I will say just in defense of the insurance industry is it's really hard to reach out to everyone on every topic. So while agents are supposed to be the advocate, it's also something that I think consumers should just be doing. It's a quick email, it's a quick phone call. Hey, I heard that I might be able to get some savings because I didn't use my office. It's kind of like my office garage. I didn't call them till June. And I said, hey, I'm not using the space. They said, of course we'll give you a credit. Why didn't you call us in April or May? There's nothing we can do about them now. So sometimes you can't see the savings if you don't ask.
Right. Well, that's a big motto over here. If you don't ask, you don't get. So might as well. And I think you can do that for companies, for employers who may not necessarily may have had a relationship in the past, or not a relationship, but may have done work for someone in the past, but not necessarily a relationship. So maybe you can tell us now how folks can get in touch with you.
You can reach me in 2 ways. One is my email address is aaron@gordoncompanies.com, AARON @GORDONCOMPANIES.com. You can reach me on Twitter or Instagram. That's NY Risk Advisor. LinkedIn, I'm pretty active there as you are. And you can reach me in my office, 212-687-2525. What I will just say on the contact thing is, like in every industry, insurance agents are hungry right now. We want to be there for our clients. We are helping people. If you just want a no risk, no cost review, we'll do that. We have told people that they have a great insurance program and not to switch, or to switch to us based on service and not on price. But reach out to your agent, reach out to me, and we'll gladly give you we'll try to help you, because everyone needs a hand in this time.
Well, Aaron, I want to thank you for coming on, for sharing some of your insight and your experience in the industry. It's something that I think a lot of people, it's an afterthought, right? It's a necessity, but they try to figure out how do they spend the least amount of money to just have the coverage that that is a necessity, but doesn't necessarily think about all the potential implications and exposure they might have. So thank you so much for coming on.
Thanks for having me. This was fun. We got to do this more often, Greg. Life's gotten in the way too much.
My name is Greg Cohen. This was Conversations with Cohen. If you have any questions or comments, don't forget to put them below in the chat, and don't forget to hit subscribe so you don't miss any future episodes. Bye for now.